guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey guys, good morning, good morning. Welcome to the live session of Stocks Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Welcome everyone to Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you all for joining. It is 7 p.m. Eastern, and it is, last time I checked, today is April 1st, 2025. So welcome everybody. A fresh new month to start your trading. So I hope everybody has a positive month of trading in the month of April. This is a fresh start for some of you guys, and this is also continuation for some of you guys that are doing really well. Some of you guys are having a fantastic year starting. So let's carry that momentum. Let's carry that positivity. Let's carry that proper risk management, and let's continue to carry that disciplined trading in the markets and continue to grow those accounts, guys. So last night, a little recap. We went in the markets last night. We started with full fundamental analysis. We looked at all of our Forex folders for the entire week. The main day this week is Friday. That is the first Friday of a new month. That is NFP, non-farm payroll. Those numbers will be coming out. Those are government jobs, and we're seeing a lot of DOGE, Department of Government Efficiency, slashing away some government jobs. So how will that impact the markets? That's going to be a big day. So we got to see those numbers. Also, Powell is speaking that day, I believe at 11:30 a.m. Eastern on Friday. That's important news because anytime he speaks, the markets move. There is some volatility, okay? And then yesterday, I just want to talk about the gold trade that we did take. I just want to briefly recap it and tell you the importance of runners, because when you get runners that run with really, really nice legs, they can go they can run for a long time. So last night we had a runner. Well, in my case, my situation, I left 20% running and I let that thing run and it ran. So we'll talk a little bit about that, and then we'll do some fresh charting on gold. We'll get ready again for the futures market. That's going to open up in less than an hour, and we'll see how the markets open up. Okay, so let's just get started quickly with just reviewing today's news. It's already happened. So today was a busy day. It's a busy day in the markets. All throughout Europe, there was a lot of low impact folders, consecutive folders. You can see there was British news at 2 a.m., Swiss news at 2:30, Spanish news at 3:15, Italian news at 3:45, French news at 3:50, German at 3:55, and the list goes on and on and on. British news at 4:15, 4:30. So there's a lot of these. So it can provide choppy trading volume. So you have to be careful, okay? And then we led into the North American markets. Again, 8:30 a.m. No specific folders at this time on this particular day. The Wall Street opens at 9:30, then 10 a.m. 10 a.m. we had some red folders regarding United States. ISM manufacturing. So this is manufacturing numbers. Remember, 50 was that number we talked about. 50 is the baseline. Above 50, the manufacturing industry is expanding. Below 50, the manufacturing industry is contracting, getting smaller, getting tighter. Why is the manufacturing industry getting tighter? Because we're going through a period in the economy where it could be leaning towards a recession. That's why we need to look at the labor numbers. We need to see unemployment. We need to start to see also our next folder here at 10 a.m. Eastern, the JOLTS job openings. Why is this important? Because this is the creation of jobs. We want to see this number exceeding the previous months. We want to see this number exceeding the forecast. Creating jobs is a good thing. If we're if we're not creating as many jobs as the previous month and it's going lower and lower, what is that suggesting? That we're not creating jobs. There's layoffs, and we have rising inflation, a declining US dollar. So these are all signs that a potential recession it could happen. Okay. Maybe it doesn't, okay? But that's why we have to look at the data and what it suggests. So when I click on ISM manufacturing right over here, above 50 indicates industry expansion, what I mentioned. Below indicates contraction. It's a leading indicator of economic health. This is why traders care. And so, what are our actual numbers? You can see the previous, like we can look at the start of the year. It was 49.3 in January. It was over 50, almost 51 in February. It was also over 50 in March. Now the number came out 49. So it's even below the forecast. So that's why it's red, and that's not good for the US dollar. Okay, let's continue with the next red folder, this one, JOLTS job openings. What is this? Again, what I stated. It's job creations. We want to create jobs in the markets. So it's an important leading indicator of consumer spending. If we're creating jobs, then we're creating more wealth for consumers to spend. If we're not creating jobs, there's less people, and if there's the unemployment is increasing, then there's not a lot of work available. So if there's not a lot of work available and you're not creating jobs, you and I, we're not working. We can't make as much money. We don't have much money to spend. So that affects the overall economy. And right now, what are the actual numbers? Now let's let the numbers do the talking. So our previous month was 7.76 million jobs that they created. Fantastic numbers. Forecast for this month was 7.69. So they're looking for an increase in job creation. Look at the actual number now that came out. Red, 7.57 million. So this number is below the forecast and it's below the prior month, suggesting that there's not a lot of job creation. The job creation in the United States is decreasing from the previous month. Is that good or bad for the US dollar? That's bad for the US dollar. If it was green and it was 7.70, it's above the forecast, it's above the previous month. That would be good because we're creating jobs. More US citizens are making money. The more they're spending, the economy is doing great. Okay, so now it's the opposite over here. So this is important. This is really important stuff to see how the overall economy is moving. Okay, and then we had some other news throughout the day, but that was the big news. If we go into the charts and we look specifically at 8:30 a.m. Eastern, and I look at the US dollar, the DXY, this index over here, it's the US dollar compared to all the major currencies around the world. For example, the Canadian dollar, the loonie, you have the euro, the pound, Swiss franc, the Australian dollar, New Zealand dollar, and the Japanese yen. And it's an overall performance against all of those global major currencies. Let's zoom in at 10 a.m. Eastern when they released the ISM numbers and those JOLTS numbers. So remember what I said, they were not good numbers. So just let's relay the numbers now to the actual US dollar. And I can see right here, 10 a.m., it's a big bearish candle, full body candle. And then it continued at 10:05, full body bearish candle. And then it continued 10 minutes. So you can see the full 10 minutes, the price drop kind of recovered a little bit of a dead cat bounce, came back up and continued to push down. And if we look throughout the day, it came to consolidate right like below the neckline. You see where the neckline is? See how easy this stuff can start to be after a while when you start to know what you're looking for and then you kind of bring it into the future. You can kind of understand how it's trying to retrace back to the critical breakout area. And since then, if I stretch this into the future, the US dollar is still below this, and it could maybe continue to move down bearish. There's a supporting level right around here, or it might continue to come back up here and retest this. Then it kind of will push above that news at 10 a.m. and then we could be retracing back up to uptrend. The market absorbed that news. Is it enough to really sell the US dollar? Maybe not, but initially there's a bearish momentum, and the numbers suggest the same. Bad numbers, the US dollar dropped. Okay, so US dollar, a little bit bearish at that time of the release of the news. Earnings this week, we went over earnings yesterday. There was no real big names this entire week, pre-market or after hours. There was nothing. If you look to this morning, any of these names are big? Not really. Will these affect NASDAQ, Dow Jones, S&P 500? Probably not. So I don't pay too much attention to those names unless it's a big name that I'm familiar with. We move into the after hours today. Again, no big names. I wouldn't be concerned about these all week. I wouldn't be concerned about the earnings this week. Also, we got some news around the markets, daily news. Get in the habit of using some type of news website for finance information. Right here in Canada, Rogers Communications stock sinks on an NHL deal. So what Rogers is trying to do is sign NHL to a license agreement for the next 11 years, and that's going to cost Rogers $12 billion for this NHL agreement. And look at how the market reacted to that. Rogers is down 5.5%. It was already down below $40 from I started shorting this thing when it was in the 60s, and now it's even dropped even further. So they're putting a lot of their money, $12 billion, into NHL for the next 11 years. And you can see how the investors, shareholders, and how the street is taking it. Not positive. There was also Newsmax stock soars today, pushing post-IPO market cap above 20 billion. So this is real news for real people. Newsmax, with like if you watch Fox News and Donald Trump and things like that, that's over there. Also here in Canada, we got rid of the carbon tax, and gas prices are down a quarter a liter over here. But there was news in the markets. You can continue to read what's going on. We had some swing trades on oil. Okay, so oil was in the news. Crude oil inventories, everything like that. We're looking for buys above $69.40 up here. It did eventually get up there. These are 45-minute candles, mind you. These are not the traditional like 5-minute candles that we do on these calls. These are 45 minutes. If you wait for a full 45-minute candle to close, you treat it as if it's any other candle. So we had the candle close, ignited pop, and then nice pullback right back down into this, and continue to retest it, then really take off to almost $71 a barrel from right there. So that's about 150 pips. Nice little swing. Okay. Yes, we do have discounts available at Stock Sniper Trading. Right now, we want to give back 50% off on all plans. You can visit our website if you want to. We also have a free blog available for everybody right over here. Stock Sniper Trading is a website, and come to the free blog and download and read and good information. Let's get into the charts. This is why you guys are here today. Yesterday, so this was a little quick recap. We did a full top-down analysis on gold yesterday from the daily, hourly, brought it down to the 5 minutes, which is here. You can see we started our call right over here, like today, 7 p.m. We watched what was happening. We analyzed. This was the move prior to the futures market. So let's kind of analyze it. Let's see if we get a pattern today. 7:45 it started right here, 15 minutes before 8 p.m. Started to go bearish. Then 7:55 right there. Here's 8 p.m. So this is when the market opened. It was a bullish candle. Didn't look like it. Broke below, held support here. We came into trade right around here. And these specific colors of these lines on my chart mean something. This purple line was the low of the day. They kind of broke the low of the day and came back up. This is an hourly point of interest. Yellow is a daily point of interest. There's an hourly point of interest, and then that was the high of the day, that purple line up there. As it was consolidating in here, I waited for this candle bar to close. It opened and it retraced into our green box that we established, and it traded into 50% of this candle. So it gave me confirmation. Not only did it pull back into our green demand zone, it also retested 50% of the bar. That's what we look for. Got a wick. As it started to flip into a hammer candle, this is where I took the buy, placing my stop loss right below here. And the first candle moved to, I was saying to fill these wicks, get up to the daily line, and then maybe hit 50% of this bearish candle, which it did. That would have been 21 pips. We measured the move prior to it happening. As that candle started to move up 17 pips in profit, I took my stop loss. I moved it to break even. And as this candle hit target, just I was explaining a scalp. I took out 80% when it hit right there for 20 pips, and I left 20% running. Now, I want to show you the power of leaving runners in the market. Look at how it retraced right back into our 50% of this this bullish candle, and also our green identified zone that we put on there while it was happening. And you see how it pulled back and it retested and continued to move. This is when we finished the call. We finished the call right here at 8:30, and then now you see the power of runners. So what happened now after the call? Look how it closed right at the high, at that hourly resistance. Look at the pullback right at 50% and continue to come back up. And once it popped, there's no wick. There's your pop. Look at the pullbacks. Pullback, 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 pullback. Right back down to this exact white line. I have not altered these lines. I haven't changed these lines. This is how I trade. I trade throughout the day with these lines. I just place signals on these lines and I react while I get a signal. You can patiently wait to trade off of these, and you don't have to make impulsive decisions. If you miss the first move, believe it or not, there's pullbacks that will come back and allow you to get back in. And you can see here, it came back, pulled back, right back down. This used to be hourly resistance, volume closing above. You flip it and it turns to hourly support. And look at that big wick continue to move. And look at gold. It continued to close above. This was my next hourly point of interest, 3,130, nice psychological area. It continued to close above, push above, get to the next hourly resistance, and look at the pullback. This was a bearish candle coming all the way back down, exactly touching that line of resistance, turning to support, and the buyers were there supporting that move and continued to close it above, pullback again. Just a pullback is a healthy pullback. If there's a trend, if there's an uptrend, you continue to make higher highs and higher lows. You don't necessarily always have to buy the highs. If you can wait patient and disciplined, and you can get a nice pullback entry as long as you have your established zones. And then remember our big red box that we had. Where did I place it? I placed it at that psychological area, 3,150. See how it kind of traded right into it? Let's get the exact number, 3,149 and 10 cents. Okay, so I was off by 90 cents. But you see where the big sell-off occurred? It didn't occur right here. The sell-off didn't occur right here. It didn't occur right here. It kind of occurred, something occurred well as it approached that big supply area. But as it came down, it didn't really break any structure. Though to me, those are just pullbacks, and the buyers continued to push it up. Finally, we tapped into that big red zone, and then there was the big critical push down. And where did it push down to? The purple line. That was the previous daily high. It broke, and then there's the retest of it. And it came there multiple times. You got a wick, and see how it bounced out of there? But this is heavy selling pressure. Look at the size of these bodies of these candles. These are much larger than all of these candles in here, so these are suggesting something. They're clue candles. When you see abnormally large candles, you need to make some sort of analysis. From this body right here, from where it opened and closed, if you can figure out where about 50% is of it or that zone, then maybe get in the habit of stretching that into the future. And you can see how it pulled right back, almost right into there, pulled back down, came in again, lower high, pushed down. No buyers are closing above this, so it's still suggesting that it is bearish. And again, they break it down there, new lower low. Where does it come down to? It comes down to a yellow daily line. And then there's the next push back up. Again, lower high, and they push it right back down. Finally, it taps back into the red box. There's where it taps in, and there's the push down. And if we continue with this, if you stretch this into the future, we still have not came up there. Look at how it continued to make lows, back up, lower highs, and then really pushed down where it broke and continued to drop. And then we came back in our green demand zone at that daily point of interest. Came all the way down there. Look at the number, 3,100. Nice, easy psychological number and a white line. We did all of this prior to the volume coming down here. This is how you can get really good at what you're doing. You can hone on your skills here, guys. And then there was a little move back up, but since then we came back down. And look at what it's retesting again. It just retested again this yellow daily point of interest, and we're bouncing off of it. I can leave the chart as is and just go right into trading. I do have lines. I can clean them up. Like I have too much inside because this is where I was scalping this zone yesterday. I can clean those up, but the critical lines, points of interest, I can continue to keep on my charts. But does that make sense, guys? That whole recap of that was kind of like the entire day of trading gold. How it can, how you can utilize it at your key critical tape lines, your key points of interest, your zones, following the trends, okay? And then look at where the big sell-offs occur. And then if you start to look at your RSI indicator, now this is kind of like back testing. It suggested that it was overbought right here, right? And was there a big massive drop right there? Not really. It was just kind of like 3 bars. It dropped. It came back in where it was overbought again, but it's in an area of strength. So it kept building up, kept building higher highs. You know, this is where sometimes RSI indicator, even when you spot divergence, can be deceiving. But when you know that it comes to a critical supply block in the market, higher time frame, and it is overbought, then you put all the pieces of the puzzle together, and then that's where you can see the market officially break down. Okay, and it held since then. When it broke down there, it broke down, it came back, it's still below that big body candle, 50% of it, dropped, new lower low. Came back up there, tapped in there, again they dropped it, new lower low. It came back up. This is a lower high from here, from that white line, from the red box, from the big red box. So they're lowering the offers, they're lowering the offers. There's buyers that keep buying, but today, the bearish momentum push down. If you look on a higher time frame, on a daily, it might just be a nice daily pullback. That's why we're going to go into fresh analysis. But as a scalper, you have multiple opportunities throughout the day to scalp the markets. And if you just are patient and disciplined, allow the trade to come to you naturally. Sometimes you want to speculate. Trade smaller, and if you do make a mistake, you can easily eliminate that trade and continue to look for good setups. You don't need to go all in. Like right here, if you went all in, like on a buy or a sell, you could have got trapped in here because these are not small moves. They look like they're small moves, but if I measure this zone from here to there, it's about 40 to 50 pips from the top to the bottom, just in this range. So if you're over leveraging, which a lot of traders tend to do, like they trade with standard lot here. If you're in drawdown 30, 40 pips, you're down $300-$400, depending on the size of your account. That could be detrimental. You know what I mean? So you got to trade appropriately. If you're speculating in here, trade smaller. If you get a good signal where it hits a bigger zone, then maybe here you use. You can go a little bit larger sizing because at least it came to a specific higher time frame as opposed to just trading in no man's land. Okay, this is where you got to be very careful. Okay, so I'm going to eliminate everything off this chart. We're going to start fresh analysis. It's 7:23. We'll take about 15-20 minutes to get this done, and we'll do the same thing. We'll watch 7:45, we'll watch 8 p.m., and we'll go till 8:30, and we'll see what happens, guys. Okay. If you guys like that, hit the like button and let's have some fun. So you see how I'm starting right now on a fresh chart. I eliminated everything from yesterday. We're going to start fresh. If you're here to learn, this is a great opportunity to learn. Most of you guys already know how to do this and you guys are doing it really, really well and you're learning from it, but let's just continue. Let's continue. If you have any questions, feel free to ask questions. This is a good time to ask questions. The market is not as volatile as it is like when we do New York sessions together, and then it gets quite intense and I don't have time to answer everyone's questions, and I feel bad when that happens. So if you have any questions about anything trading related, let me know. Okay. We don't want to trade the Nifty. What are we doing on the Nifty? Let's find our gold. Okay, so let's just get in the charts here, guys. One moment. Okay, welcome, guys. Welcome everyone on Zoom. Sorry, guys, if I didn't greet you guys. Welcome, Sergio. Thank you very much for joining. Arman, Midburma, welcome, brother. Franco, long time no see. Thank you for joining. I appreciate you. Ricardi, thank you for joining, guys. Welcome. And YouTubers, thank you guys for joining. Appreciate all of you guys as well. Mwangi, welcome. Dom, Wholesome, welcome. SST, I backtested all your signals from last week purely on an impulse entry type basis, and results are great. Just with a 75 100 pip stop loss and 1 to 1.5 R, I'm up 5%, just risking 1% with no trade management. Time to put it into effect. That's fantastic numbers, and thank you for that feedback. And that was trading on impulse, and impulse trading is not 100% confirmed. Try your analysis, backtest over a week or two by waiting for volume to close above or below if it's a long or a short position, and maybe looking for that healthy pullback, and you might even increase your win rate, more successful, and you might build more discipline with your approach. I love that. I love how you back tested our signals. That's fantastic. If you're having good results, and that's with impulse trading too, so you can do a much better win rate if you're not just taking impulse trades, but you're allowing the volume to close above or below, whether it's a buy or sell, and wait for that pullback entry. Exactly what we just talked about for the first 15 minutes. And that's fantastic, guys. So, that's a testimony from you guys, not from me. So that's awesome that you're doing that. I appreciate that. Thank you for that. And even if it was you did that and it was negative results, still, let's talk about it. Let's figure out what's going on. This is open conversation. It should be healthy conversation. And we can learn from this. So welcome, guys. I appreciate it. Hit the like, please, guys, and let's get started. So gold, okay? So we're focusing on gold when we do Tokyo sessions. It's a great moving commodity. It moves in London. It moves in Tokyo. It moves when the futures market opens up. It moves in New York. It's moving all the time. It's all the time moving, okay? So you should know that it is on a bullish uptrend on the daily, okay? Very, very easy on the eyes. When something is easy on the eyes, it's very easy to distinguish. You have a huge uptrend here, okay? It found some resistance, pivoted back to a pullback here, higher low. It continued, new all-time high, a little bit of a pullback. It wasn't like a crash in the market. It was just a 3-day pullback where you've got 2-3 consecutive weeks of bullish momentum. So healthy pullback is welcome. It allows new money to get into the market. It allows for it to come down and pick up those pending orders that have been waiting for several days to get in. And we made a new all-time high. How high? Pretty nice psychological number, 3,150, off by a few pennies here and there, but still very accurate to a nice psychological level. And we had a little bit of a bearish pullback, okay? So let's start our analysis just with critical zones on the daily, okay? So one that is very easy, and it's going to become very repetitive, right here. This was a previous all-time high, and it got rejected. It formed a supply. If you stretch this into the future, on this day, March 13, we had a nice big bullish candle close above. So I just go through the motion, whether I'm looking on a daily, hour, 5-minute, or I'm scalping 1-minute candles. I do the same shit. I just go through the motions. All candlesticks have the same characteristics. Doesn't matter what time frame you're on. A candle has to open, has a low, has a high, has a close. It can be a big body candle on a daily. It can be a big body candle on a 5-minute. It can be a spin top on a 4-hour candle. It can be a spin top on a 15-minute. But what is that suggesting? It's suggesting the same thing. If it's a spin top, it opened. It was bullish at one point. The wick pushing it down to a new low suggests that the sellers were in control at one point. Then the buyers bringing it right back up. They're in control near the close, and it closes virtually where it opened. It's a 50-50 coin flip, nobody won. Whether that was on 1 minute, that's telling me the exact volume and the price action on the last 60 seconds. If it was a 5 minute, it's suggesting same thing. No buyer won, no seller won. It was consolidation, indecision, 50-50 on a 5 minute. If I was doing the same analysis on a 30 minute, it's telling me the same exact information. It's just the duration of the time was 30 minutes. If I do it exactly, if I see that same candle on a 4 hour, it's telling me the same thing. There was a little bit of buyers, there was a little bit of sellers, there was buyers in a 4 hour duration. And if I see the same thing on a daily, like I can go on and on, a daily, a weekly, a monthly, a yearly, a 10-year, a 25-year candle, a 100-year candle, whatever you want. It's the same shit is what I'm trying to say. And most of you guys are starting to understand this concept. And thank you for understanding it, because then it makes my life easier trying to explain this stuff on a daily basis. So you understand how to always extend everything in the future, because once you establish a zone, the only other thing that's moving, the only other variable is the volume. This is the only thing that's moving. The zone is static. This will always remain a zone, a block, whatever you want to call it, an area, a point of interest, a point of control. I don't give a shit what you call this. Sometimes we call it Mickey Mouse box. I don't care what you call it. The main thing is you've got to understand how price action will react in here. So if it does initially come all the way back down in here, what's the first logical thing that can happen here? Who wants to tell me? What is the first logical, and I'm just talking the first logical thing. We don't have to get philosophical here. We just got to, what is the first thing that could happen here? I'm thinking it could bounce here. Why? Because there was a big bullish move where it used to be supply turning into demand. Maybe some buyers missed this big run up. So they could be waiting patiently, pending in the market. If you watch a depth of market, it's all pending orders. They're not market executions. So it's all pending orders, waiting in a queue. Like when you go in a drive-through at McDonald's, right? There might be a lineup. There's 10 cars in front of you. You can't go in front of those people unless you're someone like Donald Trump and you're important. Yes, you can walk in front of the people. But if you're an average person like me, you're a nobody, you got to wait at the back of the line. So same with when we put orders in a queue. You can't jump in front of me. If I have my pending order waiting from the day before and I have it pending, you can't just come and jump in front of me. You got to go at the back of the line. I'm sorry, but that's how things work in life and in the markets. So the queue starts to build. It starts building and building. The only thing that starts to like if I take my pending order out and I pull it, then that's how the pending orders are playing out in here. But from the most part, they're building in here. Especially if it's an established uptrend, making higher highs and higher lows, higher highs and higher lows. This is where the pending orders build, at the higher low support areas, on the discount buys. So I'm not going to say all the time, but with high probability, the market will pull back right into here. And the first initial thing is catch a wick in here. It bounces out of here. Okay, I'm not saying it's going to bounce out and take out the all-time high and continue, but it might have a little bit of a bounce. And where it bounces is to the next resistance. You see where the next resistance is? Right here. Was there not like a supporting area right around here? If I was to place a yellow line, see how we pushed up? And this is all after the fact. This shit has already happened. So this is how I'm analyzing the market to predict the move in the future. Do you guys understand that? We got to look at previous behavior in order to predict the next move. Okay, without looking back, how are you gonna guess? Like, we eliminate the guessing out of this. So you see how it was a nice move up, and look at the pullback. It pulled back. Just look at the candle. It came down, and it got rejected right there. It came down again, got a wick right there. Came down again, and then see how it bounced back up bullish. I don't see any bearish volume closing below there. And you see how it went right back up to the next all-time high. So if it comes all the way, for example, tumbling all the way down to the green box, you see the first initial bounce, it wants to test right here. This was previous support. And now with the volume below, it might act as resistance. So it might literally bounce right there. And that's a fantastic trade if you got it. Okay. But what you got to do is you got to measure from the green box to that yellow line. And what is it telling me? It's telling me it's about, what do we got here? From 2000, like this is, remember, we're on the daily, 2,950 to 3,000. So this is a 500 pip move. 500, not 50, 500. Remember, this is a daily. If you're just looking for like a daily swing trade, you can look at a daily candle. You can break it down to a 4-hour. You can even go into a 2-hour, a 1-hour. But you're just looking to fill that imbalance. And then what happens up here? It could definitely turn to a resistance and they continue pushing it back down. Okay. But if you, that would be like a counter move right up to there. And if you get that nice imbalance fill, that's a fantastic trade. But you still have to recognize that this is still resistance now. The buyers have to prove to you that they can push it above there and close it above there. Because then again, the line is just static. The only thing moving is the volume. If the buyers can break it through there, then it might come back down and retest this as support again with the volume confirmed closing above. This might be again support, and then we might make our way back up. Okay, so just take it like you're climbing upstairs or you're going downstairs in a bearish move. You got to go down one step at a time, and you got to go upstairs one step at a time in the markets. Okay, so I don't know why I'm spending so much time on this, but I want you guys to understand this. It is very important. Okay, so I'm going to move a little faster because it's 7:36. Ron always loses track of time. I'm horrible at that. Okay, if you guys know me, get used to it. I'm horrible with time. Sorry, guys. And then, do we have any other zones? Okay, so here was a zone. Was this not a 3-day resistance pivot? Okay, just look for pivots in the markets. Real simple. Keep this shit simple. See how it came up and then it just suddenly stopped there and pushed down. That's a pivot. That's as much information as you need. Sometimes you just need 2 candles, 3 candles. If you see something, it's telling you something. Mark it down, jot it down. Resistance, stretch it into the future. I see a bullish candle closing above. What do I got to do? I got to change that zone from red to green, right? Stretch it into the future. Okay, we continue to move up. Now what do we got up here? Okay, so we have a large wick right at 3,150, all-time high. What color should we mark the all-time high? Let's do something fancy today. Let's do a color that I normally don't do. Orange. Ooh, shit. Okay, let's go orange. It's not because of Donald Trump's face. I don't know why we did orange. We just did orange. It's the first color I saw. Yeah, Sergio, I'm fancy today. Is it Donald Trump's makeup or Bitcoin orange? What is it? I don't know. I'll let you guys think about it. Okay, or it means nothing. Okay, that's the fun part. This is the entertaining part we have at SST. So I marked it orange. And look, it's at a nice critical level, 3,150. Why is that important? That's that psychological block in the market. It makes transacting easy at nice psychological numbers. If you get involved in the markets on a daily basis, you're going to start asking questions. Why does it repeat at these psychological numbers every single day? Okay, I've been asking the same questions for over 20 years and I have no answer for it. I just know it's easy transactions there. It's like you and I transacting, okay? It's easier to transact at $2. I sell you a Gatorade for $2. You give me 2 singles or a toonie if you live in Canada, and that's it. We shake hands, you get the Gatorade, you give me $2. Boom, life is good. We transacted, it was quick, it was efficient, and both of us got what we wanted. Now, if I made it $2.07, oh man, like you're going to have a delay in efficiency. What happens if you don't have 7 cents on you? Who carries change these days? And then if you give me 225 or 210, I got to break that. I got to give you 3 pennies back. We don't have time for this. The market doesn't have time for this. The market wants to stay efficient, as much volume as possible, and keep moving. Keep moving, right? Time is money. Same with the markets. So it's attracted like a magnet to these specific psychological areas. Okay. And what's a psychological area? Common sense. $1, depending on your time frame. $1.05, $1.10, $1.15. If you want to make it in a bigger picture, $1, $1.25, $1.50, $1.75, $2 flat. Okay, so you see, then if you go bigger time frame, maybe $2, $2.50, $3. Now, if you go bigger and bigger, what about dollar increments? $2, $3, $4, $5, and with heavy emphasis on the $5, the $10, the $25. You guys understand? So even if something is trading at $3,000, we can still do the same psychological shit that we do on something that's $1. Okay. Let's just continue, guys. Wow, Ron's losing focus tonight. Okay, so we had a big bullish day. Remember what we also did yesterday? This was a big bullish day. Can we figure out where 50% of it is? I'm going to do today's stuff without guessing. I'm just going to bring out my Fibonacci tool real quick. Measure the opening price to the closing price right there of this big blue candle right here on March 31st. Okay, there's 0.5 right to the penny, $3,103.78. So there's my daily point of interest. I'm not going to use orange. Orange is all-time high. I'm going to use yellow. Yellow always is my consistent daily yellow line. Okay. If I want to make now a bullish discount zone, bullish fair value zone, a bullish box, a green box, I don't give a shit again what you call it whatever you want. Go one standard notch, one standard deviation above 0.5, go one standard line below. It's already mapped out for you. You don't have to do anything. Just make a box like we're in grade 3, just like that. Okay, see that nice green box? Why did I make it green? Because the volume is still above us. Okay, this box will turn red if the volume variable closes below us. Okay, what do I have to do? Stretch it into the future. Don't forget that part. It's very, very important. How far? I get that question a lot. Ron, how far should I don't care. Go 1 month, 6 months out. I don't care. It's static. Only thing moving is the volume. Okay, you've established it. If it keeps trading above here, maybe a pullback. That's good buy opportunity. Now let's see what already happened. What initiated already. So we closed yesterday. There's the opening price, the low. We scalped this candle yesterday. It came up to here, the high, closed near the high. Look at how we opened. Closing price, opening price. Therefore, no gaps up, no gap down. This was a clean open. Closing price, continuation, and it continued with bullish momentum where it was bullish, 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 tapping into new all-time high. Beautiful number, 3,150. We'll also break that down. What time exactly it hit the highs, because when we do dissect, we go from daily, hourly, 5 minutes. Make note of the date. April 1st today, first day of the month. This is how they closed the month. They tapped in. That's it? All-time high, first of the month, and maybe April is going to be a retracement month, or we're going to continue pushing for new all-time highs. Geopolitical events, everything around the world, inflation, hedge against the US dollar. Gold is a great, great store value. So will it continue? Time will tell. We just got to do daily analysis. So what happened when it hit up there? It was bearish, pushed down. Look at the rejection. It came back to where it opened, and the sellers were in control, where they pushed it all the way down. And look it, we traded into exactly that big green box of that big daily candle. Now let's look. What did it do at the top? It was bearish. What did it do when it hit the yellow daily point of interest and 50% of that green zone? It was bearish. Did it break the bottom? No. It kind of traded inside. Big rejection. The buyers, all those pending orders got activated, and it pushed it right back up to there. But there's still bearish volume contained in the candle. It's not bearish engulfing like where it's all the way near the low or engulf this entire blue candle and continue pushing down. It came down, went back up. Is it considered to be a spin top indecision candle? It didn't close like right at 50%, but I can see the rejection at the top. I can see the rejection on the bottom. There's still, if I do anything with this candle, what am I going to do? I'm going to figure out where 50% of the majority of the bearish volume is. Okay, I can guess, or I can get my Fibonacci tool. That's me guessing. Okay, I admit I'm guessing right there. I think that's where 50% of it is. I don't want to guess. Grab my Fibonacci, top to bottom now, because it's a bearish candle. Opening price, closing price. Look, I was right on this one. Exactly. 0.5, you see it. Now, I can do also a bearish zone. Same thing. one notch above, one notch below. There's my bearish red box. And I can continue to stretch that into the future. Now I can make a little bit of analysis on today's daily candle. So look at where we closed. They pushed it down. It was bearish. It was bearish, bearish, bearish. We made our low of the day right there. So you see that's our purple low of the day right now. I know it's fairly new candle. It only opened a couple hours ago. So, but that currently is our low of the day. It's still above the green box, so still considered bullish. The buyers are bringing it right back up. That was the high. That's the high of today, but it's still below 50% of the previous day's volume. So, we might get some consolidation. If the candle flips, we might come back up bullish and trade right into here. I can measure the move exactly, so I know if I'm scalping from the purple line to the red box, about 30 pips. If we get to the top of the red box, 45, 50 pips, and then they could bring it down. If we close above there, I can change that zone to green. If we fill yesterday's kind of remaining volume, that's an 80 pip candle. Then we're trading into our exhaustion wicks. Where's the first line? Right there, the bullish days candle. If it wants to continue go, then we continue go up the wick until we reach the all-time high or a lower high. But you can see how I'm getting my scalp kind of zones throughout the day. Guys, it's 7:45, so we got to get cooking here. Okay, so I'm going to go off the daily candle. What's the overall like momentum of the daily? Bullish uptrend. All up, higher high, higher low, higher high, higher low. All-time high. This could be a pullback and we continue to come back up to the all-time high. It might be a double top. It might be or a new higher high and we continue driving to 3,200 US gold. Okay, it could happen. It's very bullish. Okay, so if you're trying to short now and you're trying to short on a daily and look for a massive swing position, you still have a lot of bullish structure below you. So you're still considered to be a counter trading. So you have to be careful. Okay, so let's move into the hourly really fast. Now, I've done my daily analysis. So now I want to know exactly what time of the day were the big moves. So I can see when we tapped into it right there. The high of the day, all-time high, and the high of the day was last night, 1 a.m. Eastern. Okay, so that's just right before pre-London, and then here's 3 a.m. Eastern. That's London market. European markets open up. It came back up. Look at what it tested into. See that? That's a big hourly bearish candle. Try and figure out where 50% of it is. Again, guys, same shit. It's just a candlestick, okay? A candlestick, but you can cut that in half. I just use a different colored line so that I know mentally and psychologically it's an hourly white line. Orange is all-time high. Purple is it's a daily high or daily low right now, what we just did. But any other, look, it's hourly. If you wanted to do it even, you get your Fibonacci tool, same thing, a little bit above, a little bit below. Look at the red box you could have had and stretch it into the future. Look how many times now it's suggesting, came in there, pushed down, came in there, pushed down, came in there, they pushed it down, came in there, they pushed it down, and then there's your bearish flag, and there was the big drop. It happened at 11 a.m. Eastern, where it dropped all the way down into the green box at noon, started to pull right back, came down, so there's like a double touch, and now we're ignited right now going into the futures market. So is it starting a double bottom, ready to possibly break out and drive a little further? If I'm scalping tonight, there's hourly pivots all day. Place a white line right here. Why? Look it's a wick, a wick, a wick, a wick. That's where the body closed. That's where we closed above. Then with the body, the volume above, this was resistance, white line, support. Came down, back up. Came down, closed right at the white line, and continued to move back up. Here we actually physically close below it. So if we do move bullish tonight, and for example, we come through this red zone and we break, that's a good area to suggest that there could be resistance right there. If we get up to 3,127, it could come right there. And it could get rejected back down. Then this red zone, I make green, that could hold as support, and it comes back up and breaks, and then we're traveling up to right here, this zone. I could even break these down if I want to go into micro scalping these zones. Then I dissect these hourly candles into either 30-minute, 15-minute, or 5-minute. And you trade at the speed you want to trade. 1-minute trading is very fast. Fast forward trading is boom, 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 quick. Your decision making, snappy decisions, in and out, one candle, So if you want to learn how to do that, you got to train your brain to comprehend and to look exactly what it's looking for. Sometimes you saw yesterday, I get in a scalp, one candle, 20 pips, I'm in and out. I'm not thinking of where it's going to go tomorrow. That's why I leave runners for that situation. And my runner went up 250 pips when it came to that nice psychological area. And runners can run, they can add up, they can compound your account. If taking out, like I take out 80%, you don't need to take out 80%. You can take out 50, 60% and leave 30, 40, 50% running. And if it runs, continue to bank. But have a plan for anything you're doing in the markets. Without a plan, you're running around like a chicken with your head cut off. If you have a plan, a sound plan, you know what you're doing. And it's consistent. You stick with this shit every single day. It's going to become repetitive, automatic. It's going to, like, you'll do this in your sleep. It's going to become that easy. Okay? So what can we now... We're 10 minutes away from market open, so we got to continue to move. We pulled back right here, 6 p.m., made the low of the day. We came back up. There's an hourly point of interest. I'm going to place a white line here so I can get you guys looking right here. Why? Because the volume closed right there. Look at how the next hour, 7 p.m. right now, when we start our call, it's a bullish ignited candle open. There's no push down. There's no wick. There's no drawdown. It just came up. It's bullish. It's engulfing the previous hourly volume. This is a bullish engulfing candle. If it closed right here, it's a technically bullish engulfed candle. Where are we trading at? We're trading at the purple line. It's basically today's high of the day. Will we close above it and the futures market will continue driving up to this red box, or will they bring it down? If they bring it down, I'm already looking at where 50% of this bullish candle is. So I can, if it pull back, it might pull back 50% and continue going up. Okay. So you guys also see like it's a higher low double bottom right now forming as of now. And we've already established where our neckline is. So this is the one leg down. This is the next leg up. This was the next leg down. Notice it's a rejection wick, but this is what I mean by higher low volume. Look at where the white line is. And now we're pushing back up. So you see how we're maybe coming back up to the red supply box, going into the futures market. Everything happens for a time and a reason at a place. Are we going to break through here? Will it be an impulse? Will we come up here and they reject it back down? Will it come down to here? 50% when we figure out where this candle closes? Will it retouch the white line back down to the purple low of the day? Or it's a bearish move? Then we can continue to move like that. Okay. So hourly, we've got some hourly structure. I just explained to you, it's creating like a double bottom here. It might have some upside, but we still have the neckline here. Let's go to the 5 minutes real quick. Sorry, guys, if I start talking faster now. Now I got to really start cooking. So we came down right there. Okay, now I can see exactly 6:15 p.m., 6:20. We started this move. It pulled back to the hourly support, holding support. If I'm looking for any quick shorts tonight, if I get volume closing below 3,111, I'm taking it down to the daily low. That's about 40 pips. And if I get a further drop down to that yellow line to 3,103, that's a 100 pip move. Right there, zone from one line to the next line to the next line. And I can continue because I've already done my analysis down to there. Now what's under the green box? Look, when was the last time 5 minute volume was trading under the green box? This is where I got to start cleaning up and doing some analysis here. I can already see right there. Look at how many times you had a resistance right there, a resistance right there, a resistance right there, and then it turned into volume above support. So if we break that big green demand zone, and we have a free fall, it could fall down to right here, 3,085, and again, it's nowhere near that right now, but stretch it across into the future, throw an alert in there if you have to. That might be a buying opportunity. If the market keeps dumping all the way down here, that might be a good area to continue to buy it up. If it closes below here, that's a good area to continue shorting below, okay? So just giving yourself some levels. What time is it? 7:53. Okay, so what's going on right now? We're breaking out of that purple high. Okay, will the volume close above? What's the current trend right now in the 5 minutes? Okay, we're trending up, right? It's ascending. What's the overall? Okay, it's bearish. You can see from up here. This was a lower high. They pushed it down. We came back up. This is still a lower high. They pushed it down, but we're building now a higher low off of here. Again, higher low from here. But it's coming back up to the resistance. Okay, so that's why we've got to figure out who's going to win the battle up here. Will the buyers close it above and then we buy off this box, take it up to here, or maybe a potential sell below, and then we sell either, you can sell at the red box, you can sell at the break of structure right there at that purple line and drop it down to there. Again, quick scalps too. If I'm just selling from the purple to the white line, just to fill the zone, see how the volume is just hanging around in there, from the purple to the white, measure. Your measuring tool is your best friend. Your measuring tool and your Fibonacci and SST were your best friends. Okay, so I don't have too many best friends in life. My best friends are my ruler, my Fibonacci, and the SST community. These are my best friends. See, now I measure 40 pips. I'm not looking for 100 pips. I would love if it went 100. But you see how much critical structure we got to break? We got to break hourly support. To get to 100 pips, if it comes down to the low of the day, that's 75 pips. You gotta break the low of the day. There's probably a shit ton of buyers there protecting that low of the day or a higher low. If you break that and then you still come down to that daily point of interest, there's your 100 pips. But you see how much support you got to break to get down there. It's not easy. If you have news, if there's a news event like FOMC and it breaks, yeah, you could break through all of those zones naturally. But if there's just a normal regular trading session, just trade with regular volume, and don't get too greedy and just stick to a plan. If it drops 40 pips, you can close the entire trade. You can close 50%, 60%, 80%. Ultimately, you can be reducing your risk. You take your stop loss when you're at 40 pips, bring it down to break even. You can still hold the whole trade live and hopefully it continues to break and you bank more. But you got to have some sort of plan, okay? So when you're trading, if you're guessing, I can tell that you need a little bit more work. And I'm not saying that disrespectful. I'm saying it to actually help you guys. If you are guessing while you're trading and you're guessing while you're in a trade and you have no plan, then you gotta start to now work on a trading plan, so that you can become consistent and do the same shit every single day. Okay, where you're not guessing. Today I'm guessing. Tomorrow I'm guessing. Next week I'm guessing. It's too much inconsistency in that plan. I like to stay consistent. And yes, I do make mistakes. I'm a human, just like you guys. But if I'm making few mistakes, and a lot of my trades are more looking for good, positive setups with good sound risk management, I'm going to make money in the long run. I'm not saying short term. I'm saying long run. If I stick with that plan for 1 month, 3 months, 1 year, 5 years, 10 years, I guarantee you all of us will be on the positive side of trading. As long as you're not doing any reckless trading and you're not over leveraged. Okay? Sound plan, discipline. Here we go now. So we're a couple minutes, 2.5 minutes away from 8 p.m. 8 p.m. Eastern is a critical time in the markets. Why? Because the Asian markets now start getting volume. The futures markets globally start trading. So there's an injection of volume into the markets and it can be volatile. Yesterday we showed patience. We were waiting for the market to let us know what it wants to do. Sometimes that's what we got to do. Let the market do what it wants to do and we trade after the fact. You don't always got to be right in, boom, right when the market, and this is for all markets, London, New York, 8:30 news, 10 a.m. news, power hour, earnings, FOMC, NFP, CPI, PPI, all of it. You don't have to be right, boom, right in there. Okay, there's a lot of funny stuff that happens at that time too. There's slippage you got to take into effect. If you think you're buying where you want to buy, your broker may slip you up and you're not getting a proper fill. There's spreads increase. So where you're normally trading gold with a spread of, let's say, for example, one pip, maybe during volatility, it's now gone up to 3.5 pips. So you can see it's not the ideal time to trade. So maybe let the markets calm down and trade after the fact. But there's also intuition too. If you're analyzing the buildup, like yesterday we analyzed the buildup. There was a question on YouTube that asked me, Ron, did you take that candle on impulse? I said, that candle did exactly what I wanted to do, and also the previous candles did what they had to do. So it wasn't necessarily I was taking that candle on impulse. It was all on confirmations, but it was leading up to that candle that allowed me to take that candle where I took the buy, where I waited for it to open, I waited for the pullback to come into the green box, I waited for it to tap into 50%, I waited for the candle to flip to a hammer, that's when I bought. So Yes, it was on impulse on that individual candle. I didn't wait for it to close, but all the prior candles leading up to it, I waited for those bodies to close and I analyzed and I took the trade off of that. So I hope that this explanation makes sense. I don't know if I really dived into it yesterday and I explained it properly, but I was thinking about that today. I'm not sure who asked that question yesterday, but it was a good question. I think it was Luke. Okay, guys. So what are your biases right now? What are we thinking? Short term, okay? I don't want to know. I'm not asking if gold is going to hit back to all-time high in the next 20 minutes. I'm talking just with what we got going on right now. Do you guys think right now? See, okay. So how did it open? Let's break it down. How did the physical? Let's read the previous 5-minute candle. It opened. Wasn't very bullish. It didn't even attempt to come up here. It was bearish all the way down where it was a bearish engulfing candle. But remember, it's a 5-minute candle, and then the buyers brought it right back up and closed it above the purple line. The purple line was the daily high, so we got now some volume trading above it. Not a lot, but a little bit. And then now we just opened up, so it's 8 p.m. It's not opening up with a crazy volume-based candle. It came up, but look, it tested right into 50%. Okay, so I'm going to zoom in a little bit. Okay, so I use now these red horizontal rays, like these half lines. I don't know why. I think I just do it because it's lower time frame. I don't know. My brain operates different than most people. I'm crazy, so I don't know. Someone asked me, Ron, why do you use these colors? Ron, why do you? I have no idea. I don't know. I've been doing this since 20 years. I don't know. I don't know, guys. Someone asked me, do I like the Lakers, yellow and purple? No, absolutely not. I was a Bulls fan growing up all my life, and I'm a Raptors fan now. So maybe it's Raptors colors. Purple for the Raptors dinosaur, the Barney. Could be. Who knows? Okay, so what happened? Opened. It was initially bullish. We tested in 50% of that volume. There it is, half. Rejected. Now we're filling that big rejection wick. Okay, so we still have 3.5 minutes to go. Is this like a false breakout of the high and they're going to bring it down? Will this be a bearish engulfing candle that will close below everything? Will it just come down here, get a wick, and go back up? Okay, so before I take a trade, I'm waiting for this candle to close to verify and confirm more information as opposed to just guessing right now. Because I could go in a sell, and yes, it could continue to drop. That's a fact. I could go into a buy, and it could come back up. That's a fact. But I kind of want just the first 5 minutes to play out. We're still trading in this this flag right here. It could be kind of like a bearish pennant, like bearish flag, where you have this rally coming down. Now it's coming back up, and they could bring it down. What do you guys think about that? Like that move right there, guys. And then we test either this hourly support or we test the low of the day down here. Okay, it could continue to break down there. Okay, I could be completely wrong. It could just how it just did. It got a wick, still higher low, come back up, and we're driving bullish to test up here. Okay, so I don't want to talk. Like I want the volume to talk. I know I'm here and I'm talking a lot, but when I trade, I try not to talk. I let the volume do the talking. I let the candle do the walking, and I just trade off of what I see. Okay? With making as many decisions with confirmations as possible. I know it's not always feasible, but I have tested a lot of snipers and said, test yourself one day, whether it's tomorrow or it's the next day or it's the next week. One day of taking only trades with confirmed information, waiting for bodies to close and then trading after. Do not take one impulse trade on the particular time and see your results for that day. And then let's have a conversation. I've had that conversation with a lot of traders and said, Ron, holy shit, overnight my results changed immediately. I said, you're kidding me. Come on. Are you full of shit or are you just saying this to make Ron look good? They're like, no, for real. My trading changed. I said, why? Why did it change? Simple fact, reduce trading impulse candles. And then I said, well, what did you do today? Exactly what I said I was going to do. Wait for bodies to close and look for confirmations. And that just changed the outlook of trading. There was more to it too. Takes a little bit more. Just because if you're waiting for a body to close and I'm not telling you you're going to become the world's greatest trader. There's still more involved in it. You got to have proper risk management. You got to know patterns. You got to know setups. You got to understand what liquidity grabs are. All of these things, and you put the pieces of the puzzle together, and everything will make sense. Jay Zeb, when you trade 1 minute candles, do you trade 5 minute zones? Yes, bro. Good question. So you know these red lines? Like right now, I can bring it. I'm altering this right now. I can see that that's like kind of 5 minute resistance at those bodies. I can bring another red line in right there. This area is showing me. Yeah, look at this area on the 5 minutes. There was support. Turn to resistance. Resistance turning to support. So you see the red line to the red line. If I go to the 1 minutes now. See our 1 minute bodies right here? So you see how the 1 minutes now closed with some volume above? And where did they push up to? Okay, they pushed up to that red 5 minute resistance. And the 1 minute candles got rejected and they pushed down. They pulled back. Again, there's a big body 1 minute candle. If I looked at 50% of that, I can still gauge similar information right there. That's 50%. That would be red. Same shit. Well, there's a 1 minute big bearish body. There's about half of it, and you can see the retracements right into it, and they continue pushing down. So you see one fill from the 5 minute resistance to the 5 minute support. You measure your zone. You got 1 minute scalp zones. But this is where you got to be very consistent with what you're doing. It's 20 pips from the top to the bottom. So sellers, if you're selling up here and it comes down there, 20 pips. You either close the entire trade, walk away with your 20 pips, go bring your stop loss to break even. Scale out 80%, leave the rest running, do what you got to do. But because it could be support and buyers bring it back up. Okay, so those are your 5 minute zones. If you want to work on scalping those zones, absolutely. Okay, but will the 5 minutes be as strong as a 15-minute line? Will the 5 minute line be as strong as an hourly line? That's why if the 1 minute candles, Jay Zeb, I'm talking to you because it was a good question. If it breaks here, and you see if it trades all the way down there, this is hourly support. Look in the past. Hourly candle or 1 minute candles came down there and bounced properly. They came down again, they bounced properly. They came down again, they bounced properly. What happens if the 1 minute candles bleed all the way out? I want to say that right there, they'll bounce properly back up. Unless they close below, then that white line might be resistance. The buyers will bring it back up. They get rejected there. We're driving back down to here. Zone by zone, block by block, line by line. And as you're in profit on the moves, grow your accounts, guys. Learn how to do this. See right there, we broke. See the break? And then the buyers brought it right back up and we closed again above that 5 minute line. So it's still considered to be bullish. This is where 1 minute traders could be closing positions right here. You know, they're up 20 pips. They sold the high. They got to find where the buyers are and close. And then the buyers take the bag. They've sold it to them. They've made the profit going down. Now buyers could be stepping in right now. Okay, so that's the 1 minute look. Let's go back to the fives, the bigger picture. Okay, so let me just get rid of that little red box in there. Yeah, but good question. Keep those questions coming. That's a great question. Okay, so let's just talk about the 5 minute close. We came up 50% in there, rejected. That was that red line right there. We pushed all the way down, made a low, closed, bearish engulfing. Okay, so we closed below the wick. We closed below that big bullish candle. So these two candles kind of negated this one. Now, where's 50% of this big bearish candle? Right there. 3,114 and 50 cents. Okay, so if the buyers are strong, let's see if they can push it above 50%, what they're doing right now, but also physically close above there. Okay, so have we broke the trend? No, we haven't. Okay, can we take a trade? In this situation, I would be looking for buys because the buyers could bring it right back up unless I wait patiently for a bearish candle to close below here. Then I might look for that sell. But right now, it came down. Sorry, I have a lot of red lines on here, I know, but still holding here. Okay, so let's just continue to let this thing do what it got to do. Okay, so welcome, guys. I want to make sure I'm not missing anyone's questions. Thank you, guys. 117 viewers. I appreciate you guys. If you guys wouldn't mind hitting the like button, I do appreciate that. We got a free Telegram community pinned for you guys at the top of YouTube. Highly recommend you guys join it. Yeah, JZeb, the bigger time frame works. I did a webinar. We have it on the website of matching the pairs, like a relationship, the common pairs. So if you're trading a 15-minute candle, pair it with the hourly. If you're trading hourly candles, look at your 4-hour support and resistance. If you're trading 4-hour candles, pair it with like a daily candle. If you're trading 1-minute candles, pair it with either a 5 or 15 resistance support level. Okay, and then once you find its equivalent pair, then utilize that structure that you know, and we'll just watch how the volume transacts or closes or impulse moves at those specific areas. So right now we're consolidating. Okay, so look at the zone. Remember yesterday there was a nice clean move. Today we're just inside here. Is this worthwhile trading this zone right here? Again, I look worthwhile by measuring it. That tells me everything. I measure from here to there. It's 12, 13 pips minus 1 or 2 pips for spread, minus another 1 pip for maybe slippage. It's about a 10 pip zone. To me, it's not ideal to be trading unless you're looking for small moves or you're building a move. Like how sellers are trying to accumulate and build for a further drop, you could be doing that too. But also buyers are building too for a bigger pop up. If you're building a position, don't go with a big lot size. Don't go with a standard lot. Don't go with stick with micros if you're trading in the futures. Don't go to minis because you're probably going to panic. If it moves a couple ticks here or there, you're probably going to panic. So if you're accumulating a position, start small, let it build. If you start getting the confirmations that you want, then you can trade accordingly. Okay. Now we've got a bearish candle, opened, ignited. So we got a lower high, lower high, lower high. So we do have a trend coming down. We do have new lower lows in the market. Okay, so it did push down for a new lower low. I'm talking about this trend right here. Okay, I know it's when I say lower low, someone will say, well, Ron, it's not lower than this. I understand that. But from these previous bars, from 8 p.m. when we opened up, right there it was a low. It made a new lower low, and it just made a new lower low. Now the buyers are bringing it back up. This candle is going to close in 3 minutes. Is it going to close back inside this consolidating box, or is it actually going to physically close below this red line? Remember this red line? Where did I get this from? Just look at past structure. Even if I keep going to the left, right there, same shit. You see how it came down to that red line, consolidated, moved back up. Support. It came right here down to that red line, indecision. Indecision, volume closing below, push down. Came back up to that red line, push down. Now we got hourly support, white line, came back up to the red line, push back down to the hourly line, came back up, back down, closed above. We pushed for that daily high, and now we're coming back down. But look at now, rejection, rejection. So we're back in consolidation. We're barcoding, very similar to yesterday, where it was bearish, bullish, bearish. Okay, so this is where I know a lot of traders are saying, Ron, buy. Do we buy? Ron, do we sell? Sometimes I just want to say, guys, let's just chill out. Let's just chill out. Let's just see what the market is doing. Okay? And this is how you'll eliminate a lot of mistakes. It took me years to understand this concept. Nobody taught me this. Just me doing stupid trades, losing a lot of money, losing my mind, getting frustrated, getting pissed off, increasing my sizing, revenge trading, and losing everything. How is that the common story that's happened to everybody? It is in my life. Until I learned patience. Until I learned let the market do what it wants to do. The market is going to move whether I'm trading it or not. Okay? But what I got to do is I got to control my urges. Meditate, guys. Smoke weed. What do you guys got to do to calm down? I smoke a lot of weed. And we are legal here in Canada. So do not send any feds to my house. It's legal in Canada. Legal. I can go buy a coffee and get weed. Okay? And smoke it while I'm trading. It keeps me calm, keeps me cool, keeps me collected, keeps me focused so that I don't do any impulse things. Franco, as we speak. You guys make me laugh. That's just, it's like medicine for me. I'm sorry, guys, but I'll be honest. Been smoking since I was, not cigarettes, weed, just helps. It's medicinal for me. It's just like some people take Advils for headaches, some people take Tylenols, this, that. Um, Trev, how does that work when you need to drive? It works really well. I can drive. I can scalp when I'm driving. I've been doing this. No, I'm just joking. I don't want to condone that. You guys are gonna get me in a lot of shit here. No, 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 no. No smoking and driving. No trading and driving. None of that. Okay. You guys are hilarious. No, no, no. Ron is good. Franco, when I don't smoke, you always lose. Really? See, there's some correlations. There's actual psychological studies on this behavior as we're speaking, by renowned psychologists. If you guys don't believe me. Okay, let's go back to trading. We can have cannabis talk at a later time, but the volume, okay, bearish volume, not only broke a low, it did close below there, okay? And did you see how that candle opened ignited bearish? Okay, that's sometimes, a good sell clue to sell, but I've got 5 wicks below here. I got a wick right here where it came down up. I got a second wick where it came down up. Got a third wick where it came down up. Got a fourth wick where it came down up. And right now I'm getting a 5th wick where it came down up. So those wicks are telling us something, okay? This is called wick analysis now. We are analyzing the wicks, okay? So what do wicks suggest? They suggest rejections, okay? So the sellers have been rejected 5 times now below here. So it's still holding good support. And where is it holding that support? It's still holding the support above this big 5-minute bullish candle. Do you guys see a bullish fair value gap? See this wick and this wick, and you see the volume that's left behind that has been untapped right now? It's virgin liquidity, okay, right there. Look at that. Look at that box. Okay, see that? See what I just did there? See how I kind of just got that volume that has not been transacted. I can see from that previous low right there, analyzing that wick, and I can see that high right there. This part of this candle has not been transacted. Let's verify that, okay? Okay, so this candle now, prior, that just came in, transacted right in there, and we hit those pending buyers, and it came back up. So if I engage in a sell right now, what could happen is, yes, I could make maybe 5 pips, maybe 10 pips, but it could come down as I'm selling in the green box and engage those buyers, and I'm in drawdown. Okay, so for selling, now that I've established this zone, I want to wait for sellers to close below, and then I use this as a fair value bearish gap. Where it comes back in, I flip it red, then that will be maybe a better sell opportunity, okay? So this now we just established from 735, 740, 745, stretching it into the future, okay? So this is still really holding bullish now, okay? So we don't want to sell in there. It's not worth it. Let's just look at from there to there. It's only 6, 7, 8 to the bottom, 10 pips total. Not worth it. Not good risk management. Okay, so we look for maybe possible sells if it breaks this. I'll even place a signal in there. How do I do that? Okay, I like to place a signal right at 50% if it comes in there. Right click, add alert. Yes, yes, sir. Yes, ma'am. Create it perfectly. So I've got a clock in there. If it does come down in there, I get an alert. I can either look for buys out of there. I can look for sells below there. That's an alert for later tonight. If it engages, perfect. I can wait for it. But look at now the buyers. Okay, so they're bringing it up perfectly back up. Will it close above here? Will we continue pushing up? Will we figure out maybe a nice fair value gap of this bullish candle if it closes bullish for maybe to buy a pullback? But you see how sometimes you got to allow candles to build on their own, and then you're going to start to see different things and trade off of it. I know there's a lot of red lines. I want to just get rid of this red line and this red line. Don't want to confuse things, but do you see why it wasn't a good to sell below that consolidation box? Because we do have good, strong support still in there. Okay. So I'm thinking we might continue trending up, but we gotta close above this purple line and build off of this, and maybe we'll trade a little bit bullish. Okay, guys, so do you guys have any questions? Because I got about 10-15 more minutes. I know these calls, I want to keep them to 90 minutes. Do you guys have any questions? No? Okay, so we got the candle body close. Now just candle body analysis. It opened, it came down, higher low, no more lower lows. It came really bullish, okay, closing near the high. Okay, so that's a wick. This is now an ignited bullish candle that just opened and popped. And now it's driving, okay? But if I miss this candle right now, okay? So do I want to just buy now and buy the high? It's risky to do that, okay? Because it could come down. But what happens if I'm not in a trade, I can still do my analysis. I want to figure out where's 50% of that nice big bullish candle, the one that just closed right here, okay? So this guy. If I want to look where 50% is exactly, there's 50%. If I want to make now a nice little green zone, that's how I make my green zone. Okay, so I can now wait patiently for maybe a pullback buy inside here. And then some of you guys will say, well, Ron, why are you not buying this candle right now? Well, I could, but it could come up and get rejected and come down, and then it comes down in there. That's where maybe I want to buy, okay, and then buy it back up. See, I've missed this. Okay, you see how sometimes you can be late to the party. You gotta think fast when you're doing this. Okay, so this candle gave us a lot of clues, and I apologize. I should have bought this candle. It closed near the high. It opened, ignited right at that purple line, and it just pushed, and it took out that high. A candle like that, if you're just looking to scalp, if you brought the high just like that, that's about 12, 13 pips currently. 15 now, okay? 20. You can see this was like exactly like yesterday's setup. Very, very similar body of a candle, okay? So you can see like there, 20 pips. Holy shit, okay? So there's the driver. There it is. Now it's coming. I know, man, I missed the trade. Sorry, guys. 25. Look at it. 30 pips up to 35 up to that daily point of interest. Wow. Okay, so all of these sellers, these are their stops up here. And look at that bullish candle just go through. Damn, I missed that. Oh, man. That could be like the trade of this session. You know, if you wait for futures market to open, watch what's going on, you could hit one of these candles. And this thing is almost 50 pips. Holy shit. Wow. Sergio, you're still in from 3106? Oh my goodness. Wow. Trev, you're in from 3117. Wow. Guys, oh man. If this closes above this zone, that's all we have is that wick right there. 3,120. It could potentially build. So this is now, okay, so I got a pullback alert all the way down in here. What about this big body candle? 50% is right here. I can already see if it closes like right around here, that's 50%. If it closes above here, this entire red zone, I'm going to make green. And it could pull back, but it could still be demand and continue driving tonight. Holy, okay? Wow. So let's just recap. 8 p.m. See how they pulled it back here, kind of sucked in those traders, but we were trending up. Like if we look back now, I know it's after the fact, but if we look how the whole thing was created, there's an ignited candle at the daily low. Pull back, hourly support, pull back, hourly support, hold, higher low. Continue push up, close. We got this little gap, it retested multiple times, this nice green box, didn't break. I was looking for shorts below there, I'm still looking for shorts below there. But it came back up, and look at ignited small wick. There's your pop. This is kind of all of that Tokyo volume, all of that futures volume coming into the market now. And this is what we're getting now. 50 pip candles. Like it's that's why I'm saying, guys, pay attention to this time. This entire year, gold has been trading crazy during Tokyo. It hasn't been like this in years. Sometimes Tokyo are flat sessions, but this, you could come in, hit 10, 20, 30, 50 pips, boom, get out, go home with your family, come back the next day, maybe do a little bit of New York trading, maybe check out the futures session, boom, 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 and just what I'm trying to say is just let the trades come to you naturally. Look at now, it closed above here, red box, flip green. Okay, now think about it. If shorts are selling, they're selling into now maybe this entire box is pending buyers waiting to get in. Where's 50% of this big blue candle? It's right here at the bottom of this green box. But let me just verify it 100%. Go to the opening of that candle, go to the closing price of the candle. There's 50%. I told you, right at the green bottom of the green box. Visually, I've been staring at this stuff for 20 years. It's that easy, guys. It's that easy. It's going to become second nature. But if you really want to get that, again, 50%, one notch above, one notch below. See how the box kind of gets a little bit bigger? Okay, I know it's a lot of boxes. You're probably like, what the hell is this guy doing with all these boxes? But that will be an ideal area to take a buy, a pullback in here. Okay, so if you can set alerts for tonight, the market will possibly pull back in here. That's where maybe the buyers are waiting to boom, skyrocket out of here. Okay, if it closes below here, I could look for a short sell down to this green box. And I mean short sell because it could trade in there and go right back up. So if you're just looking for a short counter scalp, again, you have to be very disciplined with this. If we take a sell here and come down there, it's about 20 to 25 pips maximum. Then you got to understand that it could rocket right out of here. So if you're up 25 pips in that short sell, bring your stop loss down to break even, scale out, or leave a runner because this thing is bullish. Okay, so if you want to counter sell any move, you have to be very disciplined. Otherwise, wait for pullback buys in here, wait for a pullback buy in here, wait for a pullback buy in here, wait for a pullback buy all the way down here. Okay, the deeper it gets, the stronger the pending orders. Okay. Wow, I didn't expect this much volume. This is good volume. I hope it continues like this for the remaining of the year because we can grab some good pips in these Tokyo sessions and we don't have to trade for a long time. Like we don't even have to start. We can start the call at 7:30. Just get in, do a quick 10-minute top-down analysis, wait for the futures market by 8:30. Hopefully we have one trade, we hit 20, 30, 40, 50 pips, and we're done. We pip and dip. But I tried coming a little earlier to explain the daily news with everybody, get us prepared, a nice thorough top-down. You see, like today I took 30, almost 40 minutes doing this talk. I can do these in 5 minutes if you guys want me spitting out top-down analysis. But I want you guys learning how these lines work. And you see now how I have these lines down here? I leave these on my chart. Like when after the call, I don't erase these and start. I leave them now. These lines mean something to me. They mean something because it's the start of leading into the futures market. These can come back and be in effect later tonight in London. These could retrace all the way back tomorrow morning in New York, and it's hitting these same critical areas and bouncing out of here. So these are static areas on the charts. Okay. Sergio, what's your strategy? Your strategy is 6:30 a.m. gold. Nice. Is that one-ish indices? And then gold Tokyo session 8 p.m. That's nice. Yeah. I like how it's staggered out. Got a nice little break in the day for breaks. It's nice. Oh, and tomorrow, guys, is a big day. Okay. for United States and Donald Trump. Again, whatever Donald Trump says, the markets are. I think the markets are waiting to see what he does tomorrow. He's coined it Liberation Day, and tomorrow we'll see what is going on with that. Okay, so it's relating with tariffs, global tariffs, reciprocal tariffs. So that will impact the markets. It will impact the U.S. dollar. It will impact gold. It will impact S&P 500, Nasdaq, Dow Jones, everything. Everything that's something you can trade financially will be affected tomorrow. Okay, so just trade careful tomorrow. Guys, that's it for me. I gotta go. Okay, I wanted to plan 90 minutes on today's call. There's a free Telegram channel posted in YouTube for everybody. Here's a long on gold, like to kind of show you what we look for. Okay, see how it kind of bottomed out. It came back in, pulled back, support. Okay, and then got the volume closing above. We're looking at this nice psychological area, 31,110, 3,110. I'm sorry. Maybe gold will hit 31,000 one day. Who knows? That would be 10x from where we are now. What a fantastic investment that would be. If gold hits 31,000, Bitcoin might be 3 million. We can have that conversation or more. But right here, see how it kind of pulled back, wasn't a double bottom, above 50% here, building, pullbacks, healthy, coming closing with volume. You can initiate a sell and pull back into same structure, 50% of that candle. There's the fair value. I can see those two wicks. I definitely would have a green box going across. It's still holding and continue to break new highs. You just look up the bearish legs and you can figure out where the bearish fair value gaps are. And again, if you're continuing to break those zones are flipping. They're flipping. The sellers are they're pulling their offers out and they're lifting them higher and more buyers are accumulating. And that's how you break resistance. That's how you can reverse a trend. But that's like an example of how we send out trade alerts and signals to you guys. And we had someone say that they backtested them by trading with impulse and did really well. I don't suggest trading on impulse, but doing confirmed trading. Okay, so again, it's breaking out. There was no pullback yet. Okay, but if it pulls back to that daily yellow line right there, that box, that could be a beautiful pullback buy opportunity. Watch it tonight, guys. Just watch it. If it pulls back in here, you guys let me know tomorrow if there's a big move coming out of there, maybe a pullback, and you got that increased move. Remember, if Trump announces something with tomorrow, and we see a decline in the US dollar, we could still see gold continuing to make some moves. It's already establishing a bullish move right now in the futures market, but when we look behind us, okay, don't get too excited, like go all in on gold now. We're still bearish. If you look at the higher time frame, the orange line was that all-time high. Since then, it made a low, it pulled back, lower high. It made a new low, pulled back, lower high. It made a new low, it pulled back right there. But as it came down, no more lower lows. I have a higher low now. It pushed up now. We have a new higher high break. Okay, so that's why now if we get pullbacks, you want to buy somewhere in here to take it back up. If we can't hold here, the next move will be selling down in here. Okay, guys, I wish I could stay longer. I have a fantastic time with all of you guys. I'm sorry that I didn't buy that candle. I'm actually disappointed with myself tonight because that's a proper setup. That's exactly what I look for. I'm sorry, guys, but some of you guys hit it and grabbed it. Congratulations if you did. If you guys learned something tonight, feel free to kindly leave us a like on YouTube, and we'll see you guys tomorrow. Tomorrow is Wednesday, midweek. Okay, so it's midweek leading into NFP. Remember what NFP is: government jobs. We've been having Elon Musk and Doge team going through a lot of federal agencies, government jobs, slashing, cutting. How will those be updated in our non-farm payroll? How will that affect the trading, the markets, everything? Everything is connected. If you pull one string, another thing will move. If you pull this string, something else will move. So everything is connected. It's pretty much everything is connected to the US dollar. And That's what is going on around the world. There's a lot of volatility in the US dollar. There's buying, there's selling, there's buying, there's selling, and it affects every other security in globally, okay? Across all markets. But guys, I had a fantastic time. Please join us tomorrow. Okay, tomorrow we are coming in again 7 p.m. Eastern. Join us. We'll go 8:30. We'll see again. We'll dissect the moves, top down analysis, and we'll go into some. If you guys want, we can go into lower time frame. If you guys want to see some maybe 1 minute analysis, we can speed it up a little bit. But ultimately, just be comfortable with the time frame that you feel comfortable trading. Okay, that's the most important thing here. Just because you want to trade 1 minute candles, you have to develop the right mindset when you're trading it. Same with 5 minute candles. You got to have the right mindset. If you're trading 4 hour candles, you have a completely different mindset. You have a completely different outlook than I have on the lower time frames. So what you're looking for is a much bigger move because you're on a higher time frame. You're waiting 4 hours for that volume to close, okay? Sometimes when I'm trading, I'm just waiting for 5 minutes. I'm just waiting for a minute. So our analysis is completely off. Like what you think, you might be thinking it's bullish because you're looking at the 4 hour longer time frame. I might be just selling on the 5 minutes because I'm catching a sell move, but you're overall bigger. You're not worried about those little pullbacks that I'm selling as a scalper. You're worried for the bigger moves. Okay, so just pick a time frame you're comfortable with. The lower the time frame, the faster it goes. It's like you're fast forwarding. You're increasing the speed, so you got to increase your analysis. You got to increase your decision making with everything. With stop loss too, you're probably going to get stopped out more so than a trader who's trading higher time frames. Why? Because you're trading more, you're more exposed. So you got to have the right mindset. If you're trading 4 hour, stick with the 4 hour analysis and let trades develop. If you're trading a 4 hour, don't look for 20 pips and pip and dip. Look for 200 pips. Look for the bigger move. You're on a bigger time frame, more volume. I'm going to watch the Habs game. Dane, you got it. Montreal is in a playoff hunt right now. If you're watching, it's big. They might have a chance to play Toronto first round playoffs. I'm hoping that happens because I want to see them upset Toronto. I can't stand Toronto Maple Leafs. I'll say it live here in front of everyone. I can't stand them. I hate the Leafs, but Montreal, oh man, if they upset them, that would be amazing. So if you do watch hockey, guys, yeah, we are in Canada. We do enjoy hockey, but we do enjoy all sports here. NCAA basketball, NBA. Did you guys see the brawl again at Little Caesars Arena in Detroit against the Timberwolves? If you remember back Indiana and Detroit when Detroit were the bad boys, they're brawling in there. Again, they were fighting last night. If you want to talk sports, we can talk sports all night, but that's not what we're here for. We're here for market analysis and news. But guys, I know what you're trying to do. You're trying to get me to stay here all night because now you want to talk sports, and you know I cannot leave if we're talking about sports. But I got to be disciplined, and I got to go. And I will see you guys tomorrow. I hope, if anything, you took from this. I did a more slow top-down analysis to break things down. I hope you guys are honestly getting better at your analysis and your trading and keeping this very simple. Keep trading simple. Don't overcomplicate this, guys. I'm telling you, when you overcomplicate things, you're malice in the palace. That's what it is. Yeah. You might overlook just some easy things, guys. You see, like what I'm looking for, I'm not overcomplicating things. I'm just looking for pullbacks at nice discount areas, or if I'm selling, I want to sell at premium areas when things are overbought. It's just how we shop every single day. You know, if you go grocery shopping, you're looking to buy something on discount, right? Buy low. If you're looking to sell something, you want to sell at the highs and buy back down here by closing that position, and that's how you make money coming down. So with that being said, guys, enjoy your day. Enjoy tomorrow's sessions with Dave, and then I'll see you guys later for Tokyo. Thursday, Friday, we might move into post New York's. So we'll finish maybe another Tokyo session, maybe tomorrow evening, and then I'll let you know. Maybe we'll do 2 sessions. We'll do Thursday Tokyo, and Thursday, Friday, we'll do some post New York sessions after Dave, and we'll come in the markets. But see, we're still moving bullish, guys. if you're continuing, like just look at the moves. If you're holding runners or you're continuing to hold your buy, look at the pullback. It just came down, back up, new high. This one came down, higher low, higher low. Nothing broke down. We haven't even came into our big green box here and moving new higher high. Again, pulling back, continuing to drive. Holy man, this is turning into 80 pips just like that, guys. And then now, when you look at this overall, sorry, I have to analyze this before I go. I want you guys to see this. This is now the overall 5-minute picture. See here, this is considered like one whole bottom in here, in the green box, one whole bottom. Here's our big neckline. Okay, that's where it came up bullish right up there. And then look at how it came down. It didn't create a double bottom down in here. It created a higher low of the day bottom, and it continued to push up. We broke. Now look at the W. Okay, that's a big W pattern, and it broke. It's driving. So now it's trading in like this, filling imbalances. How high will it drive? It might drive a little higher, but if there's a pullback, that's where kind of maybe 3,118 inside here. This would be an ideal area to buy a pullback, and then bounce out of there and continue to maybe push to wherever the high is, push to the high, take out the high, and continue to get up to the next high. Try and mimic your trading like this, guys, and not just for like tonight. Try this tomorrow, try this the next day, try this next week, and then gather some type of analysis and see how you're doing after 1 week. You're gonna to see solid results in the market. You can't just base your results off of 1 day or 1 week. Try and do it 2 weeks consistent. Get a month worth of analysis and then see how you're doing. Remember, today is a new month, April 1st. Why don't I give you something to work for? Like this entire month, right now, here's the start. Journal your entries from this month, the next 30 days, and see how your trading is after those 30 days, and we'll have a conversation. I'd like to do like hockey. Remember Don Cherry, Coach's Corner on CBC? That was like a historic hockey channel with Don Cherry. He'd come in, and it was called Coach's Corner. I'd like to do that too, Coach's Corner. I'll come in here, and we'll have a question and answer. You guys unmute your mics, and you guys talk to me. We dissect your trading. I'll help you as Don Cherry helps in hockey and things like that, Coach's Corner. And we go from there, and hopefully I can help coach you guys to success. I'm not saying I know everything, but with price action, when it comes to price action, I'm pretty familiar with price action. Anything else you want to talk about? I'll try my best. Sports, I'm pretty good at sports too. Smoking weed, I'm pretty good at that too. Those things I specialize in. Okay, if you want to talk about strains, what's this, that, I'm your man. But other things, I'm not your guy. You got to find someone else. But for this stuff, I'm okay. I'm comfortable with this stuff. But guys, have a good day. Thank you guys. Have a good day. We'll see you guys tomorrow. I have too much fun in these Tokyo sessions. I promise you, I'm not like this when we go to New York. New York is more serious. That's when we put the suit and tie on. We'll see you guys tomorrow. Thank you guys so much. I had a great time. Just continue perfecting your skills, guys. At the end of the day, your results matter. I hope you guys are journaling, looking back. If you made any mistakes today trading, go back right now. If you made a mistake, for example, if you sold this move right here, like if you sold this candle, looking for it to go back and just look at it. Now that we look back at it, look at what you were selling into. You were selling into 50% of this big bullish candle right there. Okay, you sold right there, and it's very similar to this. Same setup, same shit. See this, where it was this candle bearish? You're trying to sell. Like these sellers were trying to sell in this bullish gap. And how did it work out for them? You tell me. Look at how it worked out for them. Huge during drawdown. They got liquidated, or they're still holding a massive drawdown. Okay, so learn from it. This could have been us tonight. We could have sold there, and it probably would have hit our stop loss. If that happened, we would have to dissect it. I'm sorry. Like, even I take losses live with you guys. I still got to go back, analyze it. What did I do? Oh shit, I didn't analyze this. I was trying to sell into that. That was my bad, my mistake. So I learned from it. Next trade, if I'm looking for that, I gotta analyze that. You know what I mean? Try and look for these little wick to wick touches and figure these zones out right here. Like, they're very, very important. Like this one right here. See that big bullish candle from that, pull back that right there, capture it, stretch it across, and you see how we traded into it, tapped into it. And that's all it takes. Sometimes it just takes one tap and it's gone. Like right here, for example, it just tapped in there and it was gone. Now it might possibly come back, retrace down in here. So if you're going to still trade tonight, keep an eye. I'm going to also place an alert on my chart right here. 31.18 and 50 cents. That yellow line, that daily point of interest, if it comes back down there or deeper into this box, might be a nice buying opportunity, okay? Have a good night, guys. We'll see you guys tomorrow. Please get some rest. I know some of you guys are really exhausted and tired, and you guys are putting a lot of time and effort into this, and I respect that. I truly hope that you get the results that you guys want out of trading, especially if you guys are working hard at this. I really do respect that in all of you guys, and I want to tell you guys that trading is not easy, but if you do it with a sound plan, and you do it long game, you're not worried to get rich tomorrow or next week or next month. You're thinking outside the box. You're thinking 1 year down the road, 3 years from now, how your life will be. I can see a lot of positive people making some changes in their life here. We've done it at SST for 5 years, and I'm hoping we can do it for the next 5 years with more people. So just continue working hard at this skill, guys. Perfecting the skill with yourself. Trading is very mental, emotional, financial. It tests you in all aspects of life, not just with price action and understanding a candlestick. It's more to that in trading, and that's why a lot of retail traders are unsuccessful at trading, because they fail to master the other things that matter. The mindset, trading with emotions and things like that. Once you start mastering those, you're becoming a very experienced trader, and nothing can hold you back in these markets. Okay, but I enjoyed tonight's call. Amanda, have a great day. Tobogo, thank you, bro. I appreciate you. Saru, thank you. Have a good night, guys. Sergio, I had a blast. 2-1 Panthers. Ugh, don't do this to me. It's a big game from Montreal. They got to win this. Luke, Luke, thanks for joining, man. I was talking about you yesterday. The good question you had about what time frames when you're trading, like 5 minutes, do you use higher time frames? I believe that was you, Luke, that asked that question. If I'm not, I'm sorry, but I believe it was you. And I just wanted to say it was a great question, guys. We had a lot of good questions tonight. Keep them coming, guys. They're good questions, and there's no silly questions. There's no stupid questions. We're not here to make fun of anyone. If you have a question, just feel free, feel comfortable to ask here. We don't bite. We'll help you out. Okay, guys, have a good night, everyone. Guys, I really honestly do appreciate you guys liking and subscribing, and we'll see you guys tomorrow, and I'll update you guys for Thursday and Friday if we do some post New York sessions along with our Tokyo sessions this week. Okay, have a good night, guys. Thank you, everyone. Appreciate you guys.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.